Welcome to the 60-Minute CFO podcast, where we dive into the world of business finance and uncover the secrets to running a thriving and profitable business. I'm your host, Tracy Beck, an entrepreneur, author, and your guide to achieving financial fluency in easy-to-digest lessons. This podcast, along with our book, courses, and tools, are designed to help you tackle the challenges that keep small businesses stuck. We'll explore why so many businesses struggle and fail, uncover the missing financial knowledge that could be holding you back, and show you how to take actionable steps toward success. We teach you how to make meaning of your numbers by identifying key relationships and trends so you can analyze your past performance. We learn the key drivers of cash flow because no one likes to run out of cash. And we dive into how to forecast the future so we can set revenue and profit goals and meet them. Whether you're a seasoned business owner or just starting out, you're in the right place. 60-Minute CFO is your source for understanding the numbers, making smarter decisions, and building the business and life you've always envisioned. Let's get started. You've got sales, customers, love what you do, and the future looks bright. So why does it feel like you're always one bill away from disaster? The answer lies in your cash flow, the lifeblood of your business. Let's talk about why mastering it could save you from becoming another statistic. Here is our shocking statistic. 82% of small businesses fail because of cash flow problems. That's more than 8 out of 10 businesses closing their doors, not because they didn't have customers, not because they didn't have a valuable product or service, but because they couldn't manage the money moving in and out of their accounts. Cash flow isn't just an accounting term. It's the oxygen your business needs to survive. If you're gasping for air, it doesn't matter how great your product is or how many people love it. The problem, let's break it down. Cash flow is the money coming into your business, inflows, versus the money going out, outflows. Sounds simple, right? But here's where most business owners go wrong. Mistaking profits for cash. You can have a profitable business on paper and still run out of money. Why? Because profit is about what you've earned, while cash is about when the money actually hits your account. Additionally, cash could have gone toward buying assets or paying down debt, and these activities do not reduce profits. Which leads me to ignoring the balance sheet. When we buy assets, pay down debt, or make shareholder distributions, these hit the balance sheet and do not affect profits. If we only look at profits on the income statement, or profit and loss statement as it's known in QuickBooks, we miss the story the balance sheet is telling us. If you have a company that carries inventory, you buy inventory with cash, not profits. And again, we'll not see this activity on the income statement. Another problem is operating without a cash cushion. A study showed that 60% of small businesses experience cash flow problems every year. Most don't have enough reserves to handle even one unexpected expense. The ratios for managing cash lie on the balance sheet, yet few business owners give it the time of day nor understand what it is telling them. The result, stress, sleepless nights, and a constant scramble to stay afloat. But here's the good news. Cash flow management isn't complicated. It's about adopting a few simple practices that can completely change your financial reality. So we must learn the drivers of cash flow. There are 2 on the income statement and 4 on the balance sheet. We go into this in detail in our book and in our courses. We have to track our cash flow, and preferably we do this daily or weekly. We create a cash flow forecast that shows your expected inflows and outflows for the next 12 weeks. This gives you a clear picture of when money is tight and when you'll have breathing room. Other ways we can optimize cash flow are to speed up receivables. We have to send our invoices immediately and offer discounts for early payments. We can follow up on overdue invoices consistently. It's your money, so don't hesitate to ask for it. We can also, when it makes sense, delay payables. You can negotiate with suppliers for longer payment terms to keep your cash in your account for longer. And lastly, we have to build a cash reserve. You can track your current ratio and working capital over time to see what a reasonable level is for your company. If you do not know what your current ratio is, head on over to our website, which will explain that ratio for you, or our book. Work to maintain that level going forward to ensure you have enough cash around every corner. Let me tell you about my own e-commerce story, about a business that I owned. I had an e-commerce website and I sold jewelry. We were in a high growth phase and turning really good profits of about 30 to 40% on about $250,000 of revenue. So you would expect there to be plenty of cash. But when we looked at the bank account, there was very little cash. I remember looking at my business partner and we both didn't know where the cash was. That is until we looked over at the wall where we housed all of our inventory. And of course, the money was in the jewelry. That's what we sold. Our jewelry was an inventory asset that lived on the balance sheet. And we were reinvesting in inventory at twice the rate we were selling it because our margins were so good and sales were soaring. That seemed like the right thing to do, but when it came time to pay ourselves, we couldn't. The answer was we had to slow our inventory purchasing down and hold fewer days of inventory in stock, as well as negotiate terms with our vendors to create some cash that wasn't immediately reinvested in inventory. The good news is that we finally took heed of the balance sheet and our cash flow and were able to continue growing to $7 million in revenue while paying ourselves, all because we got a firm grasp on cash flow. So what about you? Here is your action step for this episode. Give your balance sheet some respect. Pull up your balance sheet and identify your current assets and your current liabilities. You can calculate your current ratio, which is the measure of your liquidity. That is how easy it is for you to pay your bills. You want it to be above 1, with 2 to 3 being a very comfortable ratio. This would mean you have $2 to $3 of assets to pay for every $1 of liability. Again, we go into all of these ratios in our book, on our website, and in our courses. So don't get mired in the details. You can head over to 60 Minute CFO for more details. Now, I want you to pull a balance sheet from 1 month ago and 1 year ago from today. Notice the cash balances on each report. That is the change in cash when you subtract one from the other. From 1 month ago to 1 year ago. Is it positive? Is it negative? Or is it about the same? Identify any gaps where your expenses outweigh your income. This would come from your income statement. Start thinking about ways to close those gaps, like negotiating payment terms or creating a cash reserve when you can. If this feels overwhelming, don't worry. That's exactly why this podcast exists and why 60 Minute CFO exists. In our next episode, we'll tackle another critical topic, why focusing on the wrong financial metrics could be holding your business back. Thanks for listening. And if you're finding value in these episodes, please subscribe and share with another business owner who needs to hear it. Together, we can build businesses that thrive and not just survive. Until next time, remember, cash flow is king and you hold the crowd. Thank you for tuning into the 60 Minute CFO podcast. I hope today's episode gave you fresh insights and practical steps to better understand your numbers and take control of your financial future. If you enjoyed the show, don't forget to subscribe, leave a review, and share it with other business owners who could benefit. Your support helps us reach more people on their journey to financial fluency. To dive deeper into what we talked about today, visit 60minutecfo.com, where you will find more tools, resources, and ways to connect with me, Tracy Beck. You can join our community, download our free resources, and sign up for live and recorded courses. Until next time, remember, understanding business finance is a journey, not a destination. Create 60-minute habits of dedicating time to understanding your numbers, and before you know it, you will have built the profitable business and life you've always dreamed of. See you in the next episode. And this is important work for you to do because no one will care as much about your business and finances as you do.